day everyone, let's hear from BG Trading and I hope you are well. Today is 19th of February 2024 and I'll be analyzing some of the stocks that you have chosen for us on our free Facebook community, buy, grow and sell strategy for share traders right there. If you're not part of this community, I would like to invite you right now. Every once in a while we put the opportunity for you to bring some of the stocks, and the good thing is that the quality of the stocks members are now bringing over the last year or so are much way better than before, because most of the members now know when we are talking about technically discounted price, company with sound fundamentals and potential opportunities to move upwards, so we can profit, we can apply our strategy, BGS 20 strategy, and aim to lock 20 to 40% within 1 to 3 month time. This is all about this channel. Applying BGS 20 strategy to try locking 20 to 40% profit. Sometimes obviously we locked more, so we done amazing trades early this year, and obviously other times we might have to take stop losses, but normally our stop losses are anything from 5 to 12% in average. So by the time we lock in 20 to 40% plus, we are only taking a 5 to 12% loss in each position if we get wrong. But most of the time, not all the time, but most of the time we get right. And the reason we get right is because we tend to buy high quality companies at technically discounted price, and we use a multi-dimensional approach to look into the stock and make the best possible decision. Anyway, let's move forward. So we're gonna take this, one of the stocks that I really like to look at is Fenix Resources, a choice by Kim Haley, which the SX code is FEX again. And yeah, so let's take a look. Essentially this is an iron ore producer. Produce high quality iron ore with very solid operating margin. It's a small cap, only about $175 million market cap. So obviously you can't compare with Fortescue or other like Rio or BHP or something like that. But what we're looking at is share price activity fluctuation, so we can apply our strategy for swing trades and then make some money out of there. Again, like this is not an investment stock that we're looking at. We look at best trading opportunities. That's what we do here. We trade at BG Trading. Anyway, this is a diversified company. The reason I like it is because it's diversified. Fenix is a company that not only produces iron ore but also has logistic operations and also shipping, and that has been increasing its margin. By the way, this operation, the cost center of shipping and logistics, has been increasing its margin by 45% in the last quarter, which is very positive. Essentially, when we look into a quarter report, last quarter report was pretty solid and gave a very solid confidence that we could well see the stock moving potentially 20% within the next 3 months. But obviously depends on the iron ore price as well. So although this company does produce high grade iron ore, they also produce the iron ore lump, which is the low grade, but then they obviously profit as well. One of that. The sold price of iron ore sold in the last quarter was about 212 Australian dollars per metric ton, and the cost of that particular production was about $100 a metric ton, which essentially with iron ore price at 150 Australian dollars a metric ton, it gives a pretty solid margin for that particular company. So What we want to move now is to the chart formation. Let's understand the dynamics of this particular stock, whether it is a stock that could swing well. So if you look into the daily chart, that's what we're looking at. And first thing we do, we put the key BGS 20 indicators, BG trade indicators on the screen. And then obviously we try make it a sense what's happening on the, over the long term of the stock. As you can see here, since 2021, the stock's moving sideways. Moving sideways means like a really long-term consolidation phase. And so if we go to weekly chart, that's what we like going. We can see that, and then you go to the Heikenach as well. Can see that the stock price has been swinging well above 20% every time it sort of goes up, goes 20 to 40%, which is exactly what we're looking here at BG trading. So if you look at this, we have a bullish intersection level 2 here, which pretty much means the green candle on a Heikenach, that's what we're looking at, green candle on a Heikenach, crossing the yellow line there, as you can see. So look what happened last time it crossed the yellow line. It went up about 40%, 37%. So we're expecting at least 20% move on this stock. Especially after giving a relatively strong update, and that's what we wanted to be looking at, obviously. So saying, for instance, if we target a 20% profit in this particular position, we wanted to target this stock around 32 cents, which is still pretty much 31.5 or 22%, which is still below the last high in August. So, which generally helps building what we call hypothetical resistance level. So there is opportunity here for a hypothetical resistance level around 30 cents, giving or taking. So I would, if I was going to trade this stock, and obviously it's up to you to trade this stock. If you want to know what we trade, then obviously take a look on our VIP membership program. But essentially, if I was going to trade the stock, I would set my target just under 32 cents right here, and I would exit from a trade if I'm buying today at 25 cents, exit of this particular trading opportunity at 32, 21.5, and then lock the profit, move on to another stock, or even trying to buy this same stock around the same entry price, hoping that we have another sort of a higher low here. We even test this 24 cents level once again. So this is Fenix Resources. For us, is a buying opportunity. Stocks trading a technically discounted price for the short term, but a technically fair price for the long term. Now let's talk a little bit about the risks on this particular position. So as you can see here, there's a relatively small liquidity, so which means all we need is a not very large holder to sell its holdings, and then the stock would drop easily 10-15%. But on the flip side, you can say exactly the same if we have a strong buyer. You see how the sort of a number of people trying to sell here, that's what we normally use to detect. You can detect high supply of shares when we have a large number of orders, relatively large number of orders for that particular stock in a certain number. So 30 cents is relative. So the wisest way to trade the stock would be buying now and set the order around 29.5 cents, sorry. That would be the best in order to not having to fight against these sellers here. But if you want to really go towards a 20%, then you can sort of looking to lock in under this, or around this sort of hypothetical resistance level around 32 cents. So that's my taking on Fenix Resources. Diversified iron ore producer, was profitable last financial year. As you can see right here. Remember last time, probably last year, I made a few videos showing you how to actually look into the fundamentals of a particular company really quickly, just so we understand the risks. See, this company has been profitable over the last 3 financial years. So we're expecting similar profitability in FY24, even though with the acquisition, but you know, we still yet to be seen. So let's wait to see the result. But this gives us a confidence that this is not a really bad company. It's actually a company that does generate revenue. It is a net profitable company, cash flow positive, and that's why we want to speculate on a small cap. This is a small cap again, so you don't want to be speculating in a company that doesn't even generate revenue. Okay, and if you do, you gotta make sure you understand the really high risk by speculating companies that does not generate revenue. Okay, obviously, like any trade, set stop loss right under here, because if this thing keeps going going down, it could test 20 cents. Okay, so set stop loss just right under here, around 23 cents. So you still save yourself 3 cents, which 20-cent stock, it's 15-20% of a loss that you've been saving. So just keep that in mind. Would I buy this stock now? Look, probably not, just because the trading volume is not that great, and that type of stock I tend to avoid. Not saying that I don't trade those stocks, but I tend to avoid. But if you're looking at speculating something that is a relatively good quality company, and it is a penny stock, this could be an option for you to go. Just go through the fundamentals and try to understand a little bit in depth before buying this particular stock. So let's move to the next one. Okay, the next one I want to take a look real quickly is obviously Core Lithium. Max Max is I think he's one of our VP members, but let's take a look on Core Lithium. So essentially, this stock is again is a lithium producer. The company has stopped its production until mid of this year as a result of low lithium prices. Okay, if it was to trade this stock, obviously the entry point would be under this red line right there. But having said that, it's trading at technically discounted price big time. You see, the SMA 250 is currently trading at 60 cents. That would be our long-term target if we was to trade this particular stock. So again, like if we're going to trade this, I would be looking to buy under the red line, because after above the red line we're trading at formal level. At the moment, I would say it's slightly at the formal level, so would be skeptical actually buying now, especially after the stock has rallied about 25% since the bottom here, if not more. It's actually reached 18. It reached about 18 cents. Currently trading 28% above that very low, but the trend is still down. So it's got to be careful. Trading right quickly, lock in the profit and move out. That is my view on this particular stock. Remember, when we are talking about multi-dimensional analysis approach, is if the fundamentals line up with the technical aspect of the stock and the macroeconomics are favorable, then we have the ideal entry position. The problem with all those lithium stocks at the moment, I haven't actually seen lithium prices bounce, apart from some articles from analysts saying that after Chinese New Year, we are likely to see lithium prices rebound, but no really specific reasons. And the slow demand for EV materials now, because EV sales has been shrinking thanks to a lot of articles about the unreliability of EV cars, which I have to disagree, because I own a EV car myself. I own a Tesla, and I have absolutely no regrets buying my Tesla, and I loved, and we charge at home, no problems whatsoever. Haven't been in a petrol station for almost a year, only to calibrate the tiles. Anyway, so that sort of generalizes to all the similar type of lithium stocks. Now we have a rally. We see Sayona Mining rallying, and all the little stocks. I think, honestly, this you just gotta be careful. If you made profit out of this, happy days. Start thinking about having a target and locking your position, and then wait for the stocks, the whole sector to try it slow again, and then obviously maybe attempt to buy again. But we've seen before stocks with commodity that's trading really at the low prices. They tend to stay down for quite some time, and we still haven't seen a sort of flat bottom yet. The stock tends to trade at the consolidation level sideways for quite some time before bouncing remarkably. And we saw that with tech stocks, with stocks like a Tyro, stocks like a Zip, for example. They tend to stay flat for quite some time, and then obviously when they really rally, then they break out the downtrend movement, and then they start sort of going up. The RSI is looking constructive, but I've seen many construction like this, and positive construction on RSI, but then breaking down right here because the macro and the fundamentals are not there. So just be careful. I'm not saying that you shouldn't be trying. If you wanna try buy lithium stocks, that's the time to try when it's trading at technically discounted price, cheap. Okay, so but I wouldn't buy it before. I was waiting potentially to buy under this red line, which is probably another couple of cents down. So 20 cents, 21 cents sort of level has risen a little bit too much for me already. So let's move to another stock that I found interesting in that, which is WBT, Webbit Nano. So Webbit Nano is a sort of a technology, artificial intelligence sort of stock. So if you want to have exposure to this particular sector at a very high speculative level, this could be one good option for you. This is, for me, is a trading stock. So if you're looking at buying this particular stock, you need to find where are the technically discounted price points as well. As you can see, there's a constructive formation, RSI sort of looking into constructive formation as well, and potentially a bullish intersection level 1 right there. It could be a buying opportunity. Obviously, if you buy this particular stock, you need to understand that the fundamentals are pretty weak on that sense. So WBT, understand the risks is critical. WBT financial results last few years, as you can see right there, there's nothing really, only huge losses. So you're really speculating in the market and the stock that doesn't generate revenue. Obviously, they are waiting for a license. They actually report a small revenue coming up a month or two ago. However, they still not sustainable. That will come up in the FY24 revenue coming up, but they're waiting for a new license in order to be able to take on board some new offtake agreements with companies that would be using their technology. Okay, so very speculative. It is a good trading stock. but you gotta be careful. You gotta be careful. You gotta know what you're doing, and then make sure you have stop losses at any cost, non-negotiable for this particular one. Let's take a look at AGL. So if you look into the chart formation, it looks pretty constructive. Company has recently reported, and the report is actually very positive, but the stock fell. The resilience fell because a lot of analysts, so the so-called analysts, telling the risks about government intervention. Now that the company has reported a pretty decent profit, government intervention to get the energy prices down once again. So if looking at the RSI, which I'm going to be including on this chart right now, it looks constructive as well. But what we have here is a 30% fall on the stock since it's peaked around $12. Would I be buying this particular stock now? Potentially yes, because the fundamentals of this particular stock was the last report. The first half of FY24 was positive. Take a look in there. Take a look on ASX and type AGL. It is a solid, large cap company that still moves like a mid-size or small cap stock. Net loss last financial year, but this first half was net profit. So it's a big turnaround. It pays dividends, but then a lot of analysts are talking about the potential government intervention. This is speculation, guys. The underlying business hasn't changed. So my honest opinion is that high quality stock now, trading at technically discounted price. Anytime you want to buy these stocks, these large caps, it's now at technically discounted price, right? Not at the formal levels. And also when they are reporting positively in comparison to the year before. So you have, here you go, you have two green ticks right there for you. And definitely I can see potential 20 to 40%, 20 to 30% easily, 20 to 40%, yes, possibility as well, stretching a little bit, but it's not impossible. So relatively low risk stock at the current level, giving or taking. So just to wrap it up this video, so stocks that we'll be looking at then would it be, if we're going to buy this, look into companies that are trading at technically discounted price. AGL is the lowest risk, trading at technically discounted price could be the best opportunity right there. Then you have a higher risk Webbit, WBT, higher risk WBT, trying to break this short-term moving average into bullish intersection level 1. That is positive, constructive RSI as well. So positive. Then FEX, another stock, very low volumes, but is sort of trading at technically discounted price for the short term. Could be at least 20% opportunity right there. Would I buy? Probably not this one. And core lithium, again, making sure if you make profit, you lock in, use a strategy that locks the profit, have a stop loss, and embrace for potential test of the bottom once again, because the trend is still to the downside. Okay, so strong negative forces, short trading forces in this sector. So just watch out. The falls can be really, really hard. Thank you very much for watching. Let us know what you think about those particular stocks. And if you agree, if you don't agree, if you have any questions, put in the comments below, okay? Thank you very much. I'll see you in the next video.